hopefully the recording goes well. I use Google Meet all the time, and I've never had a problem with it yet. But we will planning to record this, and we'll send out the recording to everybody later this afternoon, along with one or two other handouts that I have for you guys. But we had some very excellent questions and comments come in while when I sent out that registration form. So a few of them, Bob had said that, what do you find most challenging about trading part-time? Bob's answer, ability to make trading during working hours. Daniel said, I'm still in the beginning stages of learning to be a successful trader. Melanie, stock selection and time zone challenges. Kelly, I work full-time, so it's really challenging to balance everything and find resources that can help me to be more efficient. Martin, finding time to research and also the old classic of when to sell. Lots of stuff in here. Noah, finding the time to do daily routines. Phil, routine and managing positions. Is the work worth the reward? Rao, time to focus. Risk management, a proven method to do it repetitively. You're seeing a common theme with everybody here. Sam Sul, if I mispronounced your name, I apologize. Missing the profitable setup. Robert, not overcomplicating routine and data where it becomes too cumbersome and there are diminishing returns. Why? Stop loss and exit timing. And finally, Vic, busy schedule and the right tools to track the market. There's plenty of other people here that didn't comment, but those are just the people that answer the question, what do you find most challenging about trading part-time? And it really does sound like that there's some pretty common themes in there, right? Having to do with time, having to do with trade management, overcomplicating everything. And this is all the stuff that I dealt with in trying to learn how to trade part-time. And I finally, I was struggling with trading part-time for a decade. Then in 2011, that's when I finally began to turn the corner. And in 2018, that's when I had finally done well enough to where I was able to say goodbye to the day job and be here talking to you guys. Now, it's not where now all of a sudden, like, oh, like I've switched gears and I'm trading full time. That means that I've got screens all over the place and I'm, I'm just staring at those screens all day long. No, that's not what my objective is at all. What I love doing is being here and talking to you guys. And now I've got even other vocations that I'm pursuing. So trading is a part-time thing for me too. And so I want to share with you the processes that helped me, because when I finally turned the corner in 2011 and I found a group, and we'll talk a little bit about that group too. When I first sat in this group, it was the New York City Investors Business Daily meetup group, all investors trading the same kind of style. Within a year of seeing them and watching them, people that were trading full time, people that the one guy was running a hedge fund, and then there's me sitting in the audience with a lot of other people that were also there, starting out, trying to figure this stuff out. After a year, I went to them and I showed them, hey, here's what I'm doing. Well, what do you guys think? And then they invited me to be a leader of the group. And I'm like, well, why would you want me to be one of the leaders with you guys? Well, what could I possibly offer, right? I'm here a year. You guys have been doing this for a long time and doing it professionally. What I was doing that was different, that they wanted a fresh perspective to, was how I was able to start to make trading work and make trading work part-time, because I was taking what they were doing as full-timers and I boiled it down to its core elements to make it work in a very efficient manner where I was able to do it part-time, right? So day job, doing this stuff at night, on weekends, and it not taking forever. So that's a big part of what we're going to be discussing today. So let me share my screen. And okay, so a couple of key points before we dive into things. Number one, don't expect to master everything right away. If you think that this is going to be easy, it's not. It is going to require work. So when I say that, yeah, you could learn how to trade part-time and do it efficiently and all that, though once you've got the routines down and you understand, well, here's what I'm looking for and why I'm looking for it, and you build the habits, that's when things start to move very quickly and you're able to go and basically do this almost with your eyes closed. It takes a while to get that part down, but we're going to go through the processes and everything that helped me to do this. Like I mentioned before, today's part-time processes were developed in 2011. They've evolved, and I'm still using them today. So in essence, you get to jump 15 years ahead. I thought I saw a comment or a question pop up. Are there any questions or comments on anything so far? Or are we all good? Okay. So first, let's talk about how the major players operate. There's a whole bunch of ways that the major players, and by major players, I'm talking about the major hedge funds, mutual funds, pension funds of the world that are managing billions of dollars. This is basically how they operate, right? They're looking at fundamental analysis, basically everything, right? Fundamentals, quantitative, technical, macroeconomic, sector and industry analysis. They're assessing risk. They're looking at general market sentiment. They're trying to forecast and predict. And the latest is ESG factors. All of that is going into how they're going to do their buying and their selling and every decision that they're going to make. And it's true whether they are whether they're looking for growth, they're looking for value, they're looking for a blend of the two, GARP, which stands for growth at a reasonable price. All those things go into how the major players operate. Now, what I do is rooted in CanSlim. Are you all familiar with what CanSlim is? I'm happy to talk about it a little bit if anybody is unfamiliar. Anybody unfamiliar with what CanSlim is? Give you guys a second to, or if you are familiar with CanSlim, just type yes into the chat. I saw a little thumb go up. Go ahead, type into the chat. Andy, yes. Rob, yes. Okay, good. All right, so looks like for the most part we are familiar with what CanSlim is. Okay, great. So then it'll come as no surprise to you that as far as how the major players operate, Daniel has it taped to his desk. That's awesome. So as far as how the major players operate, that's not how I'm looking to operate. I'm not looking to do every single little thing that they're trying to do because they've got entire teams dedicated to doing this stuff and doing it thoroughly. Like that part, I can't compete with. But I don't need to compete with them at the same game that they're playing. I can basically ride their coattails, right? Because trading is a game where we get to observe the decisions that they make. Now, how do we observe the decisions that they make? We get to observe the decisions that everybody makes based on the way that price is moving. right? And it's really boils down as simply as that. If they're making all the decisions, right, and they're moving billions of dollars, and it's all based on this, they're not able to move in and move out of the market very quickly, because if they did all their buying all at once, they would move the entire market. So they've got to do it slower, in stages, try to play games to manipulate things, whether it be in dark pools, in the news, in all this stuff, right? It's not where they're trying to screw the little guy like us. Like they're screwing each other because they've got a jockey for positions. Otherwise, they will move the entire market, and they could end up losing billions of dollars, and oftentimes they do. So what we need to do isn't doing all their work, but to observe what it is that they're doing. And the way that we do that is by what we're going to talk about today and ride their coattails, essentially. So the first thing that we do by doing that is by seeing what's moving and what's worth buying. So how do you go about even doing that part of it, right? Because there's 10,000 or so stocks in the market, 10,000 stocks. Do we necessarily want to be buying all of them? Or should we be interested in all of them? No. The truth is that only a handful of them are capable of making big moves, moves of several hundred, several thousand% in just a span of a couple of months, couple of years. So what we want to do is focus on those much smaller handful of stocks that have the ability to do that. Now, how do we know which ones have the ability to do that? We don't know which ones, but we know which ones have a better probability of doing it. And the way that we know which ones have the ability to do it is by doing a historical analysis. That's where everybody's already familiar with Can Slim. Everybody's already familiar with this guy, William O'Neill. And basically what he did, and what I also talk about in my own book called The Trading Mind Wheel, is going back and looking at history and seeing, well, which stocks did move several hundred, several thousand% in a relatively short span of time, taking a look at those stocks at the aggregate level and seeing what's common among these. And what it all boils down to is what O'Neill came up with, the acronym called Can Slim, which you're basically looking for very strong earnings and sales, very strong annual earnings and sales, then looking for something that's new about the company, whether it's a new product, a new service, a new management, new CEOs, something that's a big game changer. Then you're looking at supply and demand, which is basically, well, the part that we're going to be doing now, right? And that's the part, or one of the parts that's helped me so much. And it's the mindset part of it too, because if I'm not trying to do all this stuff over here, but I'm more focused on just watching what these guys are doing, and I know which pool to fish in, then it's more a matter of, okay, I can watch what the major players are doing in just a small select group of stocks. Great. Now my time is really cut down dramatically because my focus is very narrow. Does that make sense? Does that make sense, everybody? Just type in yes, it does, or no, it doesn't. Daniel says, do you access certain sites to acquire information on what these institutions may be acting on? Great question, and that's actually what we're going to get into next. So let me see here. Before we get into that though, right? Riding the coattails, we're going to be seeing what's worth buying. So part of step one is screening for your own stocks. Step two is identifying the setups, the stocks most likely to move after you've done your screening. And then number 3 is doing a deep analysis on the ones that you've identified as being great. So what does all that stuff mean? So number 1, screen weekly for your own stocks, right? So there's a big benefit to screening for your own stocks. And the big benefit is that you know exactly what's going into the sauce. And it may seem, like I don't care so long as I trust IBD, right? And for a long time, that's how I started out. Is everybody here familiar with Investors Business Daily? I assume that you are if you know O'Neill, but just to confirm. Yes. Okay, so they've got a few different lists that they put out routinely. Well, a big one is the IBD 50. It's their top 50 growth stocks at any point in time. Great. So I would take the stocks and look at that and be like, okay, this is my starting point. And that was pretty good for a while, but you never really knew what was going into the list. Like as you start to get deeper into the weeds of, well, I'm trying to trade part-time and I'm trying to do all this stuff. Eventually you get past the idea of, I want to make a lot of money and this is going to be so much better. I'm going to outperform the market, to being like, well, I want to understand what's going into this stuff versus just kind of blindly trusting what's in here. And you don't know exactly what's going in. You've got an idea, but you don't know exactly. But so if you do your own screening, then that's when you know exactly what's going into the sauce, so to speak. And it's actually not that difficult to come up with your own screens. Well, when I was started, when I first finally found out about O'Neill and screening and all this stuff, that was back in 2010, 2011. And it was around that time that I signed up for MarketSmith. Yes, now it's called MarketSurge. And I developed my own screens so that way I would know exactly what's in my universe, right? And so I'll share that with you. These right here, and is everybody able to see this? I'm pretty sure I shared the entire screen, but are you able to see the screens here? I'll make this a little bit bigger so that way you can see what's on it. Okay, great. So these are the screens that I would run, and please feel free to screenshot this if you want. I will send out this document to everybody later on once the recording is ready. So you'll be able to have this, but this is what I'm screening for. And I would screen for this I initially screened for this in MarketSmith. Now there's another tool that I use called DeepVue, and I've recreated all the stuff in DeepVue. In fact, let me pull up DeepVue for a minute. I love the tool. I'm not trying to do an ad for them or anything. That they don't. But I've rebuilt all of their screens, all the screens that I had in MarketSurge here because it's more efficient, and so they're all in here, and I'll run these once a week to see what's passing, and then based on what's passing, I'll add them to my universe list. All the details of them are here, right? So I'm looking for stocks that I consider to be sector leaders, stocks that have accelerating earnings and sales. I'm looking at IPOs that already have strong earnings. I'm looking at IPOs that already have strong sales. This one here, super earnings growth that just have even higher earnings numbers, right? Looking for earnings that have at least 50% over the last quarter, that have been accelerating quarter over quarter. The reason why, but it's all stuff that O'Neill did his research on it and found. And when I go and I do my own research, I see the same thing. And I think that that's an important point too, that it's one thing to get your starting point from reading a book, whether it's O'Neill, whether it's my book, whether it's Minervini or whoever else. It's one thing to read somebody's work and that being a great starting point. To take it to the next level, doing your own research, because that's what's really going to solidify your beliefs. Because it's not just the knowledge; it's knowledge and putting in the work. That's what's going to form very strong conviction to where it's like it's not hoping that something works, right? Like I think that, well, one of the things that somebody had written in earlier for the what do you find most challenging about trading part-time, like somebody had written about the having conviction in this stuff and believing that it really does work. The way that you will know that it really does work is by actually going and testing it out and seeing, well, does this work? And you could run all these screens and do this kind of stuff without opening up an account at a broker and funding it and then just putting on trades. No, like you could do all this stuff just by back testing. Right? Oh yeah, and then I've got all my screens in here, so in DeepVue too. So I'll send all the stuff to you guys. But by knowing what goes into your universe, it's super helpful in so many ways that it'll blow your mind. It really will. That whole screening, you'll be able to do all the screening in less time than we've been talking right now, because you build your screen and then you just simply run it, see what stocks pass, move them on to a universe list. And then when you look at your universe list each week, you start to see, well, what deserves to be here, what doesn't deserve to be here. And then you can add to improving your list week to week, and it doesn't take that long at all. You might also start to see other things within your universe, right? So for some of you that might be trading, maybe you're trading for a couple of years now, you could just take a look at that list and see, well, are there certain sectors that are growing within that list? Are there certain industry groups that are falling off? Well, what's performing well within the list? And then that's going to give you deeper insights into, oh, wow, look, the semiconductors are all of a sudden, they're starting to heat up. They're starting to set up, and that'll start to give you insights. And you didn't need to do all the stuff that from back here, right? You didn't have to do all of this to get that. You're just doing that by running screens and seeing what's moving. And that's such a time hack. It's unreal. Right? So the next step to keep things moving here, identify setups, the stocks that are most likely to move. This part is very, very important. You must define your setups. Most people don't. Most people will think that, oh, well, a flat base just means that price is moving sideways and that's a flat base, right? So you might take a look at, let's see, well, what's a halfway decent example here? Just going through one of my other lists. I look at TradingView as well. Let's look at this one here. Is this, let's see how deep this is. Yeah, I think this one will be good. Right, so here's a stock that was on my watch list, right? Price gapped up, starting to trade sideways. We're looking at a weekly chart, and people might take a look at this and say, oh, you know what? That looks like a flat base to me, right? We could draw a little box around this. Flat base. Is it really a flat base? Well, we've got to have a definition for what constitutes a flat base. Whatever your setup is, whether it's a flat base, a cup with handle, a red bunny, well, whatever you want to do, come up with a definition for your setup. Now, you don't need to invent setups from scratch. O'Neill has a whole bunch historically. In fact, his How to Make Money in Stocks is the best book that I've seen as far as a historical analysis of the setups that have repeated throughout history. So I can't recommend How to Make Money in Stocks more. The first 100 pages of it goes through stocks going back to 1890 through, I want to say it goes up to about maybe 2008 or maybe even 2011. And you're seeing stocks having their monster moves, the different bases that were in there, and they're all valid bases, right? Because he's making sure that they are. So you get to see, well, here's what an actual cup with handle looks like. Here's what a double bottom should look like. And you have the criteria too. Here's how I define my own setups, right? And I would recommend that you come up with something similar for yourself, even though like you can read another book, or even if you're like just following along with what I'm doing, let's say, right? Like some of our members are on here right now. And for those of you that are, you've seen me share this spreadsheet with you many times. The idea isn't for anybody to just take this blanketly and be like, okay, this is a setup and I'm going to just follow what Mike's doing. Part of the idea is to have this be a framework to say that, okay, if I want to have a pullback, here's where I'm going to look for it. Here's how long it needs to be. Here's how deep it needs to be. Here's how it should look, right? And you come up with a description for what this thing is. And then based on this, that's what's going to allow it to be repeatable. So that way, when you're looking at your stocks and you're going through that universe list, you know exactly what you're looking for. And it's very specific. So that's how you'll be able to get through a universe. Right now, my universe list is about 300 stocks. I'm able to flip through this thing very, very quickly because I know exactly what I'm looking for. And I've drilled these setups here and what they look like into my mind that I'm able to flip through a chart very quickly and see, is this a pullback? Yes or no? And flip through a chart, flip through all this stuff, and it'll take me less than 2 seconds per stock. Right? Like, for example, let's go through some of the ones over. Actually, the way that I've got this organized, I have that universe list. Let me pull up. Yeah, here's this right here. Right, so I would be going through this, and maybe that one looks interesting. This one's already extended. That's sort of interesting. I'll move that one over. That's already breaking out. This one is very choppy, right? So it's like that. We've already gone through 7 names, and it's taken me just a few seconds to check off which ones do I want to go and do deeper work into. That's why we need to define what our setups are, and that's how this process starts to move very quickly. And it moves very quickly for a part-timer, right? Because this is what I was doing when I still had my day job. And this part, like you're doing the bulk of this, or at least I was doing the bulk of this on the weekend, right? So after Friday's close, You can even start a little bit before the close if you press for time. Sometimes I'll do that too. But you're doing this more or less on your own time. So it's not where you have to even do it during market hours or after market hours. You're setting it up in your own way. Saw a comment here from Rob. How do you track industry groups not using IBD? Very good question. So right now I'm using DeepVue. DeepVue has their own way to track industry groups. They basically made their own version of MarketSmith. They've got their group rankings. They're similar. They're not exactly the same. The thing that I think that's important is being consistent with whatever it is that you're going to use. So if you're going to use IBD, stick with IBD. If you're going to use MarketSmith, stick with MarketSmith. If you're going to use DeepVue, then stick with DeepVue. I believe even stock charts, stockcharts.com, they've got their own ranking. So if you're going to use them, stick with them, and then that's how you'll start to see the nuances of this stuff pop out. A free way to do it, if you go to investors.com and let's say, well, what stock are you interested in? Let's say that you're interested in, I don't know, let's say Palantir. Right, that was a popular one. It's starting to fall off. You could get the group rank right here. Sector software, industry group computer software, industry group rank 10. So you could still get this stuff for free, but you could see how cumbersome that was to have to log in, and you're getting it one by one versus having it in a list. For me, I'd rather have the time savings than the money saving of coming here. But there's nothing wrong with doing it that way. Next, deep analysis on the great setups. Deep analysis on the great setups. So each week, it's not where you're analyzing 20, 30, 40 stocks. You're only going to really do deep work on 3 to 5 names on average. Sometimes there might even be 0 if the market is cruddy. How do you know which ones are the great ones? Very, very simple. You're going to know which ones are the great ones because you've already gone and you've done your setups. You already know which ones are setting up in strong patterns because you've built out your model book. If you take the time to do this, then this part here becomes very easy because you already know, well, is this a pullback? Yes or no? Well, no, it's not a pullback. Great. On to the next one, on to the next one, on to the next one. Then you get your small group of, well, what's a pullback? Great. Now I can see, well, does it have these qualities that take it from good to great? Oh, well, there's only a handful that have these qualities. Wonderful. How many of them look like these models here? Does it look like this? Oh, well, there's some of them that do, some of them don't. And then that's how you're starting to whittle things down. Right? And that's before you even do the deep work. All this is like eyeballing it. Then by the time that you get down to it where you're only going to be like, well, there's 3 names or 4 names that I'm considering putting my money into, that's when you start to do your deep analysis on them. The way that I like to do my deep analysis is by this tool that I cooked up. And this is free to use also. You go to marawealth.com like I did over here. You go to tools and you click on Trade Gauntlet Calculator. This thing has a whole big laundry list of things that I'm interested in a stock. It's basically a checklist, but there's weights assigned to it. And if it gets a score above a 7, then that tells me that I'm willing to put my money into this thing. If it doesn't, then I'm not willing to place it as a working order. Working order. Well, what's a working order? A working order is when you log into your broker. Every broker is different. The one that I like to use is Thinkorswim. I find that Thinkorswim has the best order entry, and that they also have very good execution. Even though they recently switched from TD to Schwab. Schwab had bought them out. There's been some hiccups that people have complained about. I haven't seen that much of it myself because for the most part, I'm just using them for execution. And for execution, they're still very good. So what I'll do is I'll place buy stop limit orders with them, meaning that if price triggers, right? So let's find a stock here, right? So let's say that I'm interested in this one here. If price were to break out, say, right here at $30.80. So I would say, great, I'll put a buy stop in at $30.80 to buy X number of shares up to a certain limit price. So that way, if price explodes and let's say price opens up way up here, that I'm not just buying way up there, that I want to buy within a certain percentage of this level. And that does a couple of things for me too. But that's basically the idea of how, even as a part-timer, you're able to go do your screening, find the best names, then just place an order for the ones that are really good. And you could set it all up, even set up where your stop loss is going to be, even set up your first couple of scale outs, your targets, and then walk away. And if it triggers, it triggers. If it doesn't, it doesn't. And you don't have to sit there and babysit trades. That's quite a bit of how I operate. That's probably about 90% of the way that I operate. Any questions on that part or so far? Daniel says, as an exercise, you just gave me the idea to take one setup at a time and go on a hunt instead of looking for all of them at once. Yeah, you could do that too. So when I'm flipping through my screens, right? So when I'm in DeepVue and I'm going through my routine, I'm looking for all these stocks. I'm looking for whatever setups I find. The setups that I find are all outlined on this list. I already know exactly what I'm looking for. But if I was just starting out, I would just have one, right? Like start out learning one and then only look for that. Or if you want to have two, fine, have two, at most three, right? You don't need more than three if you're just starting out. The way that you're going to master something is by focused effort. And if you're trying to learn too many setups all at once, I feel as though that's a mistake. That's what I actually want, that path of trying to learn everything in how to make money in stocks all at the same time. And it was intense. I think that if I could go back and advise my younger self, I would tell my younger self to just focus on one setup at a time. If I had to pick one, I think that a flat base is probably the easiest one because it's just trading sideways. It's real easy to identify, and it tends to work very well. There's other characteristics that you could blend in there too, such as a lot like over here, the VCP action. For those of you that are familiar with Mark Minervini, he looks for volatility contraction patterns. Well, that can also be within all these bases. So anyhow, that's one of the things that I would look for. All right, so you're only going to do deep analysis on just a handful of great ones, 3 to 5 on average, and because the whole process is going to go very, very quickly once you build the habit, understand what you're looking for, and get it down. That's how it doesn't take that long. But if you're expecting to be able to do all this overnight, like that's what trips people up. So don't fall into that trap. Now on to step number 2, right? So step 2 is analyzing the indexes. Analyzing the indexes. So it's very similar to what we were just talking about, but there are a few key differences. The key differences are, one, you're going to be looking at daily, weekly, and monthly timeframes on all the major indexes. Right, and the major indexes that I look at there, I've got my TradingView set up right here, where I could look at monthly charts, look at the weekly charts, look at the daily charts of the major indexes here. And well, when I open it up, it's just like this. Right, like it's all just set up at the top where I could just flip through them and see, are they moving in the same direction? Is one weaker than the other? Is one moving in one direction, another one's moving in another direction? And just in that, it's telling me a lot of information. That's what I actually am now calling index relativism. Right? Index relativism. Are they moving relatively the same, or are they not? When they're not, that's when you start to get some choppiness. And that's what we've had for the past 3 weeks. And in fact, the market's getting a little bit weaker now. I look at new highs versus new lows. I also look at distribution days. The reason why I look at new highs versus new lows is, well, it's the number of stocks that are making new highs versus new lows. Very simple to look at. There's some indicators that you could get to look at it inside of TradingView. If you don't have TradingView, I believe that barcharts.com, that they used to publish it. I'm not sure if they still do. I think that FinViz might have it. I believe they used to have it. But it's also something that you could just Google new highs and new lows and find out what the new highs and new lows are each day. But I find that having it baked into an indicator on TradingView makes my life a lot easier. I've got it on the NASDAQ right here. It's telling me every single day how many stocks are making new highs versus new lows. And logically, it makes sense. And I've gone back in time for as long as TradingView allows. And for more than 20 years, I think I was actually able to go back. Was able to go back further than that? I want to be accurate. I don't want to. Yeah, you could go back 2001, so more than 20 years. What I've observed is that there's never been a significant period where you're running up without the number of stocks making new highs outpacing the number of stocks making new lows. When you start to see that the new lows are outpacing new highs, right? Like when it's green and steadily green, that means that new highs are continuously outpacing new lows. When you see that it's not shaded, then that means that it's sometimes you're having new highs outpacing new lows. Sometimes new lows are outpacing new highs. When it's steadily red, then that means that new lows are outpacing new highs consistently. So whenever you see that new lows start to outpace new highs, you're either close to a rollover, or at the very least, you're going to get chop. Well, fast forward back to today, and what do we got? Well, we started to get some new lows in here. Then we got this section where you're not moving either way. Then it starts to turn up, and now we're back to being disjointed. So at best, what do? You get chop. I didn't have to spend all the time of doing all of this stuff back here, right? This is where you're trying to keep up with all this stuff, and it takes forever. You're trying to read every single news article out there. Why is the market moving this way or that way? It takes forever. It causes fear. It causes lack of discipline. You just look at the data, well, like this, and it tells me everything I need to know. And I'm not bothered by noise or outside influence or any of that stuff, because all the stuff that's in here, all the stuff that's in here and more gets baked into what's here, right? This is the decision making. This is the reflection of every single vote that's been cast by people's dollars. And that's what helps us to be very, very efficient. So you learn how to read this and interpret this, you can trade very efficiently and without so much of the noise. All righty. So analyzing the indexes, that's number 2. Number 3, analyzing your own trades. Now, that's something else that could give you really deep insights into the overall health of the market. Should you be scaling up, meaning should you be betting heavier? Should you be scaling down, betting lighter? It's going to give you many, many insights into the market, far more than what we have time to discuss today. But how do you know, right? Because that's where people get tripped up too. Because common thought, I had this thought too. If my system is working, then I should be making money. Well, trading is a game of probabilities. So you're not always going to be making money, even if your system's working, right? Because it's a game of probabilities. The best traders on the planet basically have fairly close to 50-50 win rate. Some of them a little bit more, some of them a little bit less. I'm about 50-50. Right now, my win rate is about 45%. How can you possibly win? Does that mean that you're losing money? No. My last year, my returns were fantastic. In the last quarter alone of last year, my account was up 20%. In my aggressive account, I was up over 200% on the year. The way that I was able to do all that was with everything that we're talking about here. And it's not where I'm just looking at charts all day long. It's taking all this. It's the knowledge part that takes a while, right? If it were very easy to learn, if it didn't take any time at all, then yeah, like everybody would be doing it. But and it's not where this is going to take you a decade to learn. If you focus on the right things, you could learn how to do all this stuff within a year or so, maybe even quicker depending on how much focus you're willing to give it. But it's the consistency of doing this over and over again. So how do you learn? How do you know that if your process is followed, it will work over many trades? The way that you know and not wish is by studying, testing, modeling. It's one of the reasons why I consider testing and modeling to be one of the 8 essential skills needed for trading mastery. And that's why I included it in my book, The Trading Mind Wheel. By testing and modeling, that's how you're building strong beliefs. If you don't do that and you're just reading somebody else's work and you're kind of hoping for the best, that's where things can start to go off the rails when you've had 5, 6, 7 losses in a row. And it's not that you might be doing something wrong. Having 6, 7 losses in a row, that's common to any system, right? If you have 100 trades in a year, 200 trades in a year, statistically speaking, you will have winning streaks and losing streaks. If you're operating in the same way and executing perfectly, that's not because you're not getting the winning streaks or the losing streaks because you're an excellent trader or because you're a bad trader. You're getting it because of statistics. Question from Tim. Do you track how often you follow your process on a trade? Yes, I do. If so, what is your success rate of following your process? Pretty close to 100% at this point. Every now and again, I'll deviate. But when I deviate, I would say that 95% of the time that I'm deviating, it's because it's intentional and I'm trying something new in like a test account. How often do I make a mistake? I would say maybe 2% of the time, right? So out of 100 trades, 2 of them. But the more that you're able to eliminate mistakes from your trading, that's the key. And so part of the question, Tim, becomes, well, how do you define a mistake? I define a mistake as any time that I don't follow my trading plan. That's a mistake. What's a trading plan? Basic trading plan is going to define, well, where are you going to enter? Where's your stop loss going to be? What's your target? Great. I actually broaden it a little bit. It's not just did I follow my trading plan, but did I follow my business plan? All right, well, what's a business plan? A business plan is going to be basically everything that we spoke about already, right? Because this is how we start to operate our trading as a business, not just a hobby. A lot of people have trading hobbies where you're on social media, you see a stock that's moving, it sounds fun. It's almost like watching baseball and doing like fantasy baseball. It's not that there's anything wrong with trading as a hobby. It's fun, but if you want it to be something that you make money with, then it needs to be transformed into a business. And so you need to have a larger business plan. And the reason why is because that's going to help your thinking and help you flesh things out. And yes, it will take a bit of time to set up, but it's worth it because it's what helps you to operate super fast and with a lot of confidence, and with the confidence because you've put in all the work. Rao says, would it be possible to have a short session on how to set up TradingView the way that you do it? Yeah, actually, I've done that already. Let me pull up my YouTube channel, and it's right here. So let me see if I can, I'll grab the link to this, put it into the chat, and there you go. So if you haven't already subscribed to my YouTube channel, please do so. All righty. Let's see. Daniel says, every trade, whether profit or loss, is success, long as I do not deviate from the plan and rules. Key is to mitigate risk. Another thing with planning, and part of the business plan part, there has to be a element of how are you going to continuously improve. Because if your plan lacks that, then you're just going to stay exactly where you're at. Yeah, there is no improvement. So you have to have something that says, here's how I'm going to continuously improve. Here's how I'm going to journal my trades. Here's how I'm going to post-analyze my trades. Here's the timing when I'm going to do that stuff. And I know it sounds like a lot, but you could set all this stuff up part-time. It's a matter of managing your expectation of when am I going to start making money with this? You're basically signing up for a part-time job, and part of the first part of your part-time job is learning the skills. going to school, learning the skills, and then you're able to set this stuff up, and eventually it can grow large enough to where if you want to have a side income, it could be that. If you want to have it leave the day job behind, it can be that. There's plenty of people that have done it. Plenty of people in our group that have done it, myself included. So is it worth it for the person that asked that earlier? Yeah, I think that it is. But you have to really love this stuff, right? If you're looking at this and you're like, well, gee, you know what, Mike? All that, everything that you said, that's wonderful. I don't know if that's for me. Well, then this is what you're getting yourself into, and it's better to know what you're getting yourself into than to not and spend years turning your wheels. You could just buy the S&P 500, like buy SPY and call it a day, right? And then you don't have to spend extra time doing this kind of stuff at all, and you'll still get market returns, and that'll be good. But you're here because you know that you can do better than that, and you want to. And if you've been sitting here listening to me for an hour, hopefully you like this kind of stuff. And if not, then I guess you had a good nap. Anyway, let's see. Well, what else? Well, that's basically what I've got for you guys for today. So let me know what questions you guys have, and we could go through questions for a little while. And if you want to turn on your microphones and ask a question, please do so. Daniel, I'd rather learn this than flip burgers in my retirement. Yeah, absolutely. And there's so many ways to trade too, like that. But you got a little glimpse into my general process, but there's a lot deeper than we could go to.
Mike,
Andy says this was really good. Oh, no.
Yeah, I had a quick question. So I've been trading now a little over 7 years, and I use Market Surge primarily for all of my stock work, screening the market, checking the lists, everything. And everything you're saying here today makes me realize like I'm probably spending so much time that can just be made more efficient by using a lot of other tools and setting things up more efficiently.
Mm-hmm.
How long, because I believe you started using IBD tools too, how long did you feel it took for you to feel comfortable to like completely just step away from a lot of the IBD tools and know that, all right, my screeners and everything are working, that I'm not missing anything, and I can actually be efficient doing it?
Well, it's not a matter of am I missing something, right? Because I think that's a common fear. Am I missing something? The truth is that we're all missing things. We're missing trades right now. There's trades happening. And does it matter if we miss something? I think that what matters is not whether or not we're missing something, but that we catch the ones that come to us. And if we do miss one, that we know that there's another trade coming right after it. One of the big beliefs that I have is that the market is an infinite stream of opportunity. So if I miss one trade, I'll get the next trade. And it's not where, here's something else that I learned too. The market tends to move in waves. So when people talk about trends and seasonality and those kinds of things, yeah, that stuff is true. We don't know exactly how long a trend is going to last. We don't know how long a particular season is going to last. Just like how there's winter, spring, summer, and fall. And we know that it always goes in that order, but we don't know exactly how long each season is going to be. Once the season comes, it's there, and we're able to start to take advantage of it. So, for example, last year, I mentioned the fantastic year. 3 months carried the whole year for me. And the rest of the year was basically treading water. Right? In fact, Let me pull up my monthly tracker over here. Let me share my screen again. Right, so I built the spreadsheet for myself to help me look at my performance at an aggregate level. And one of the things that I noticed, well, when I was looking at my stats from last year, there were really 3 months where I had average gains above the 10% in June, in October, and in November. Right, that was my average gain per trade. And I look at that versus my average loss. And my average loss is basically like under 5%, often under 4%. So when I look at stuff like this and I compare it to the rest of the performance for the year, in August, I was away, so there was barely any activity at all. Just one trade that was closed out. When I look at this overall, one of the things that jumped out at me was like, wow, for the most part, like you tread water, and then there's some big opportunities. And then when the big opportunities show up, they tend to show up in a wave, right? So during those periods, I start to see high quality setups. I put the trade on. And then what happens? It either starts to work or it doesn't. And I play that game all throughout the year. I'll find high quality. Every trade that I'm putting on, it's meeting my definition of a high quality setup. All the stuff that's in here, right? So I'm finding these kinds of setups all throughout this period, and then it's just, well, is it working here? Not so much in January, not so much in February. So I start trading smaller, right? Because things aren't working. So I start to trade smaller and smaller. This is what's called progressive exposure for anybody that's familiar with that term. So I start trading smaller. Then later on, May starts to roll around. Oh, things start to improve a little bit. June rolls around. All right, now we're starting to rock. So I take the profits from the winning trades and I use that to finance additional size. And I start trading bigger and bigger. And then that's lifting the equity curve. And because I was trading smaller during these other months when things weren't going as well, I didn't have that much of a drawdown. Yes, you do have a little bit of a drawdown, but there's a big difference between being a boom and buster where like you're digging yourself into a hole and then you have a big month and you're back to break even. And then things start to go south again and you dig another big hole and then you have another big month and then you're back to break even. That's how you get to be a boom and buster. If you're using progressive exposure in the right way and you're operating this way, you have a little bit of a drawdown, and you're having a little bit of a drawdown because you start trading smaller when things aren't working. Remember, we mentioned this part here, analyzing your own trades. So by analyzing your own trades, and you get to know, like, oh, things aren't working, start to scale down. You cut your sizing in half and then by half again. You start to scale down. Then when you start to have months like this and you start to have trades, multiple trades in a row, and they'll come in waves like that. That's how you start to have, and here's how it looks on the charts, right? So in September, October, well, we're big months. We're coming off of here and all that's happening. There's lots of stocks that are setting up in this period. And by putting them on and then seeing them work and then putting more on, seeing them work, letting them run, having a plan for how I'm going to scale out of this thing, that's part of what builds the account. And it's not it's not looking at this stuff all day throughout the day. It's understanding what I'm looking for and yeah, having a plan for all that. I'm not sure if that answers your question, Rob.
Yeah, no, it does. And it's funny because now thinking back to some of the best years I've had, I look at, these kind of posts that come out about the best stocks of the year, these model book stocks and things like that. And I may have only caught one or two, if I'm lucky, of maybe three of maybe 10 to 15 of these giant movers for the year, yet still had a great year. So I see what you're saying, that, even if let's say out of the 15 model book stocks that come out this year that made these amazing moves, I'm only catching maybe 8 of them on my screen, and I'm only trading maybe 1 or 2 successfully. That doesn't necessarily mean that I'm missing out on something, because, even IBD is missing a model book stock somewhere in their screening as well.
Right, and we don't know which one's going to be the model book stock until after the fact. Right, like, let's see how Reddit was one of my big winners this year. I had caught the initial breakout down here, and I did very well with it. Right now, it looks like it's starting to top out. Right, but I didn't know that Reddit was going to be a huge winner down here, but it passed my screens. It was setting up properly. Actually, this was the second time that I bought it. I initially bought it back here and was shaken out of it somewhere over here, and then it set up again, and I re-entered. But we don't know which one's going to be the big winner until later on. How about Asana's a recent one? Well, yeah, it's a model, but like, are you picking it up over here? Over here? Like, I've had it on my radar. It hasn't broken out for me yet. Like, because I started to, like, I'm looking at it afterwards over here, right? Like, I saw it when it gapped up 40-something% like everybody else, and then was just sitting and waiting. Over here, there was a little bit of a pullback. That's still way too extended for me. And then I saw it starting to pull back over here. And it's like, all right, maybe we'll get something. And yeah, so far, it's still consolidating, like a lot of other stocks are consolidating.
I'm relatively brand new to this, and I'll say that what Michael has been teaching has really been instilling patience and waiting. I waited all week. So many times I'm like waiting for SN to do something, and and it did something just as the plan was made. We don't go in until it crossed what our alert was. It crossed our alert. Wait and see what the volume's doing and the pricing. And I jumped in, but I jumped in on the plan that Michael laid out. And of course, I'm still learning how that all works. And I can say right now, I'm successfully in a great trade, and I raised my stop to where no matter what, if I get shaken out, I'm going to make at least $1.25 on each share. And again, I'm only trading very small shares right now because I'm learning, but his process and system really works. If you follow the rules and don't jump out of those rules, don't get onto a different train, right? I'm originally from Long Island, and how many times have someone slept on a train and they end up out in Smithtown when they had to get off in Valley Stream or something?
Oh my God. Got
to stay with the rules. And that's what I can say. Out of all of the different systems and people that I have tried to look into, I'll tell you right now, Michael's system is really great with learning how to trade with patience. Can't do it any other way.
I appreciate that. Thank you. And yeah, it's just, this is what's worked for me, and it's not, a long time ago, I read in O'Neill's book, How to Make Money in Stocks, that it's not his system, it's the market system. I would say the same thing here. Like that, yeah, like this might be my style, but it's not mine, right? Like that, this is all everything that I spoke about here. This is because I'm standing on the shoulders of giants, right? It's because I've learned from O'Neill. It's because I've learned from Minervini. It's because I've learned from Darvis and Livermore, and Tharp and countless others, right? And also studying my own work and everything else that we spoke about of modeling and putting in that kind of work. And that's how we learn and we grow. And it's I feel very, very happy to be able to give back in some small way because of how much success this has brought to me and my family and to my community. Let's see. Well, what else do you guys have?
Copy model spreadsheet you showed. I thought that's something I hadn't thought to do, is to track every trade very explicitly to each model. I thought that was, categorizing everything. That's
this
cool.
is where, if you want this is this. So I have this in my playbook. So this whole spreadsheet here. Well, with this monthly tracker, I also keep my lists and open trades. This one just got shaken out. Shaq is probably close to being shaken out now. SN, that alert just triggered. But this whole thing goes out to everybody in our research program and in the accelerator. And this template goes there too. So what you would be able to do for anyway, Daniel, you're in this. So you might know this, maybe you don't know, but I think you know. You could just go to File, make a copy, and then you're able to have your own version of this or delete this, and then you're able to just use the spreadsheet as a template for yourself. So that way you have your own journal and spreadsheet and everything. You don't need to start from scratch.
Excellent. Thank you.
Yep. All right. Any other thoughts or comments or questions?
My first time listening to you. This was fantastic. I really appreciate it.
Oh, my pleasure. How'd you find us?
Someone on an IBD Discord posted it, and so I just kind of came over. I wanted to sort of get away from work for a little bit, and yeah, this was really good. I've been trading for a couple of years. This year, actually, same success months you had, and I sort of mirrored that this year. But yeah, this model thing you're showing, that's not something I'm doing to this level of detail, and that looks that seems like a really key part. Getting in there and really understanding what you're doing with each one by assigning it a name. Oh, that's perfect.
Yeah, I found it to be very, very helpful. Very helpful exercise. Yeah, so cool. Glad it was able to help out a little bit. So later on, I'll send out the recording of this. I'll send out these screens. Right, so that way, if you want to build these screens in whatever platform you're using, whether it's MarketSmith or DeepVue, or you might be able to replicate some of it in stock charts as well. One of our other coaches, Stu, has similar screens that he runs in stockcharts.com. So it matters less like which platform. You could pick whatever tool or app. Just be my recommendation as far as tools go, just be consistent with what you're looking at, and that's how you'll spot nuances. Yeah, other than that, yeah, that's it. I'll send out the email in a little bit, and I hope that you guys enjoyed this. If you have any other questions about anything, you know where to find me.
Thanks, Michael. Have a great weekend, everybody.
Thank you.
All right.
Thanks a lot, Mike.
Take care. Bye. Bye, all.